All right. Well, we have someone who invests here in the Indian market and runs a large book. Conrad Saldanha is Managing Director and Portfolio Manager at Neuberger Berman. Conrad, good morning. Great to have you with us here as always. Thanks very much for your time. Prashant this side. Conrad, the market sentiments are buoyant. I mean, I think I could use more adjectives to describe what's going on. And it's not just the new highs on the Nifty or the bank or the Sensex or the the frontline indices, right? It's really about stocks and the hunt for ideas and people kind of willing to look beyond what they've traditionally felt comfortable looking at. And I think that's showing up across the board, broadening out. I mean, I think in the US you can say it's AI stocks leading the charge higher. I don't think you can make that accusation for India. It's a very broad-based move, Conrad. So I just wanted your thoughts there. And are you also willing to, or have you also started to look at stuff that you've not traditionally looked at because of whatever reasons?
Yeah, I think, Prashant, thanks for having me on. Yeah, we've already looked, fairly behind the headline names. Historically, and you had an opportunity in March when the market sold off. Right now, obviously, we're at a point where the multiples are not as conducive as they have been. But if you take a longer-term view, maybe it's the time correction on these names that might be utopian. And maybe it's an inflation print that brings a little bit of jitters into the market that gives you that opportunity. But I think we've already looked at these interesting mid-cap opportunities, knowing the promoters well, the businesses that we believe are going to execute. It's the same names. I don't think I definitely sticking with a quality bias. I would not start to go down the quality spectrum in terms of businesses, more cyclical type of ideas. In my mind, I'd come back to saying that the financial sector, which hasn't really taken part in this big rally, I think that looks to be more defensive, and growth looks good for the private sector operators. So again, ICICI is named. We've owned Industrial, hasn't really participated in this. Those to us are good businesses, going to continue to grow, and haven't really participated in this big rally.
Okay. Conrad, thanks a lot for joining in. A lot of milestones are being hit in this market, right? Another big development yesterday was that equity mutual funds saw the highest ever inflows at over 40,000 crores. And SIPs as well have seen highest ever flows coming through. There's something that the retail community, the domestic community is bullish on in the Indian markets. Is it the fact that the budget this time around has more leeway for populist measures, has more leeway for putting more money in the hands of the middle class? And what is your own expectation of the big event?
I think the budget is definitely what has people excited, right? Given that the market's already done well into this, barring the wobbles after the election results. Definitely, there could be, I shouldn't say definitely, but there potentially is the possibility of some more stimulus. But I think the government has been pretty measured in terms of keeping an eye on the fiscal. So I do not see a major trend that's going to change that. Potentially a shift in the mix. If you start to see better state finances, the deficit probably improving by 20, 40 basis points, you could see some of that being recycled. But one of the areas has been rural consumption, which has been soft. You could see some stimulation of demand there, but I would not think it's going to be a blanket deterioration on the fiscal in terms of the spending power. But consumption for me is an area, obviously, of focus where it has been soft for an extended period of time. Given the hikes that you're seeing with the telecom sector, that might only be 20 basis points on an inflation stat, but it probably matters, especially as you go down the income pyramid in terms of how much that's going to bite into the pocket. So we'll have to see potentially is there some relief for the consumers, but I would still go with the view that they are concerned about inflation. They're concerned about, obviously, external factors. You've seen how strong the dollar is. And so I do not see a major slippage or deviation from policy, potentially some tweaks. But again, I'm a bottom-up stock picker, but that's my view of India being pragmatic.
All right. Hi, Conrad. Good morning and good to see you. When valuations seem to have run up a little bit, but there are still some opportunities in the markets. And as you said, you're a bottom-up stock picker. What about tech? That's come back in a big way. The last 1 month or so, it's been a big outperform in comparison to the Nifty itself. I think the Nifty IT index is up 15%. It'll be bracing for a couple of numbers. How are you placed on the tech space?
On the tech space, Nigel, we were more conservative, given that we saw earnings, especially revenues, start to get impacted. You're seeing budgets from enterprise side being a little tight and more concerned, given that they had to allocate to this whole AI spend and trying to get all those GPUs. There's a massive allocation of capital that's gone there from these IT budgets globally right now, as CIOs are trying to figure this out. So what it meant that the IT service bids were taking longer to close. They were getting pushed out the scope. Some of them getting reduced, but also getting probably pushed out and canceled. So you're seeing a lot of these deferments coming through. But my guess is those are being factored in. And now you're looking at an opportunity where, for folks in the nearer term where the whole market has done well. These have been big laggards. And there's a narrative that software and services are later cycle businesses that should see some benefit with this AI spend. But I think it's too early to call that as a proper shift. But the valuations start to look more conducive, given that the market broadly, barring, I would say, tech, financials, I would probably put in pharma into that space, and consumer stocks haven't really participated in that rally broadly. And so I think you're seeing a little bit of money flows helping that sector more than a major shift back in fundamentals.
Conrad, sorry, go on. Please finish that point.
Sorry, I was going to answer, Nigel, to your point that where we, yes, on our tech exposure has really been, as we mentioned before, it's been on the EMS side. Yes. So on the manufacturing, which continue to execute well. We also have a software exposure through Orient Pro, and that's a good banking software business. Those are where our exposures are. We are seeing really solid growth coming through.
So Dixon, Keynes, some of the EMS manufacturing kind of plays, I'm assuming you still own. Jyoti CNC is a name you've spoken about. Venus Pipes is something you've sort of outlined earlier. Orient Pro, I think, that you just sort of mentioned. And of course, the big banking names, right? ICICI and HDFC Bank, etc. So that's some of what you own in your portfolio. Got that?
With some of those, Prashant, we probably, our preference on the banking side has been ICICI and IndusInd Bank. I think, like I had mentioned historically too, HDFC is just a longer term runway in terms of the merger being digested.
All right, fair enough. We'll leave it there. Good speaking with you. Good chat as always, Conrad. Appreciate you joining us here on the program. Thanks very much for joining us. We'll take a